First of all, thanks SumZero for organizing this event. My name is Alan Out, and I'm a value investor based in New York. I have been doing value investing for almost 6 years, and I specialize in software and FinTech. So today, I'm really excited to share my investment thesis in Cloudflare, a 28 billion market cap companies, ticket NET, listed in New York Stock Exchange. So Cloudflare is my topic in the large cap software space. It is the leader in cloud-based web performance and security solutions, and is currently riding on a significant AI tailwind. I believe it has the potential to reach 80 billion market cap, i.e. $200 per share within the next 5 years, representing a 20% kicker opportunity. In this presentation, I would first talk about Cloudflare's history, products, and financials. Then I would dedicate time to explore its competitive moat and flywheel effect. Additionally, I would also analyze its unit economics and ROIC, return on invested capital. Finally, I will address the risks, the AI tailwinds, and also its valuation. Pardon me in advance, this topic might delve into technical details. So I'm aware it's like 3 p.m. right now in New York time zone. So feel free to grab a coffee if you want. So before delving into Cloudflare, I would like to outline my investing philosophy in the software space. I find 3 types of software business particularly intriguing. The first one is business development as a service. This business provides developers the essential building blocks to test new ideas more easily, from communication to payment, while in the past, they did not have the resources to cut the deals with the carriers or open a business like banking account. Examples include Turail in communication and Stripe in payment. The second type is algorithm as service. They offer algorithms that are difficult to replicate. This may involve modern data warehouse or large language models. Examples include Google's BigQuery and Snowflake's data warehouse, or OpenAI's ChatGPT. But today, the focus of Cloudflare's investing thesis centers around the third scalable business model, namely the OPaaS as a service. This type of business involves the transformation of what once considered a CapEx, a capital expenditure, into OPaaS, operating expenditure. They convert traditionally high-ticket CapEx into smaller, more manageable OPaaS, and enabling developers to prototype ideas with very minimal financial expenses. So Cloudflare is obviously the leader in this category. It basically unbundles the complex network hardware market. So with just a swipe of your credit card, you can deploy Cloudflare in front of your website or application to have the top tier security and optimal performance. Although Cloudflare might not be a household name for many, its impact on internet is very profound. So if you have ever gone through the let's know your human verification process on ChatGPT, you experienced security solutions provided by Cloudflare. So beyond this, just consider your routine internet browsing. Actually, more than 20% of the websites that you interact with are supported by Cloudflare solutions. If you have a website, whether it's an e-commerce website or a more advanced AI chatbots like ChatGPT, someone can launch a massive attack on you. So you need protection, and that's where Cloudflare comes in. It's kind of sit between the users and your application or your website. Let's rewind a bit to look at the history of Cloudflare. Cloudflare was founded by Matthew Prince, Michelle Zatlyn, and Lee Holloway in 2009, driven by a fundamental mission to enhance the internet experience. The founders began with the basic idea that the internet is not as good as it should be. So they identified 2 critical pain points that they aim to tackle early on. The first one is there are security threats faced by websites and online applications. but there's a lack of user-friendly, easy-to-use solutions available in the market. Second, with the internet traffic rapidly rising, there's an absence of a dependable, scalable network infrastructure to manage that traffic, so leading to slow response times. So very early on, their main focus is in DDoS attack mitigation and CDN services. So what's DDoS and what's CDN? A DDoS attack, distributed denial of service attack, is basically a malicious attempts by hackers to disrupt normal traffic by overwhelming your servers or networks with a flood of internet traffic. And CDN, content delivery network, consists of a distributed group of servers that host content closer to the end users, allowing websites to load faster. So consider the major website you interact with: Netflix, Amazon, or Facebook. They all serve their traffic through CDNs. At the same time, like the founders also saw the rise of cloud computing with traditional software transitioning to a SaaS application and physical servers being migrated to public cloud. They anticipated the evolution of network to follow the similar trend, ultimately moving into cloud services. So in the first 10 years of their history, they are targeting and disrupting a 30 billion TAM, total addressable market. So that was used once dominated by Cisco in network and Akamai in CDN, as shown in the graph on the right bottom. Fast forward to today, Cloudflare has expanded its TAM five times to 150 billion to offer service more than just DDoS mitigation and CDN. To use their languages, they have expanded into Act 2 and Act 3. So what's Act 2? Act 2 is mostly about zero trust. The basic concept of zero trust is to assume no trust, i.e. each component of the network doesn't trust each other. So even hackers gain access to one component of the network, their damage will be constrained. So zero trust has become even more critical with the surge in remote working and the Internet of Things. So the reason Cloudflare got into zero trust was the realization that they have a lot of idle capacity in their network because not all servers are running at the same time. For instance, it's 3 p.m. here in New York, so there's a lot of traffic on the East Coast, but it's midnight in Hong Kong, so the servers over there are very cold, i.e. idle. So Cloudflare has leveraged this capacity to build a more competitive zero trust configuration solution. It's much cheaper and much better. It's simply laying software and zero trust on top of their existing network. So zero trust has a much larger TAM, as shown in the graph. And within just 5 years, Cloudflare has achieved 20% attach rate in Act 2. And lastly, there's also Act 3, the developer platform known as Workers. The Workers platform was initially developed for in-house use to enable rapid innovation. But customers very quickly realized that, and this is a really good solution, and they also want to a similar capacity. They didn't want to deal with spinning up virtual machines or containers. They didn't want to select a region to deploy code. Instead, customers wanted a serverless platform to deploy code to build application so they can, on the edge of the network. That is the history of Workers. And today, Worker is the edge compute serverless platform that allows developers to deploy logic decisions on the edge nearest the endpoint, whether it is a cell phone or an autonomous or a driverless vehicle. It results in a much lower latency. Currently, there are over 1 million active developers on the platform, and Act 3 has also achieved 20% attach rate and is growing the fastest among the three acts. So this is the overview of Cloudflare's history and products. And next I would talk about is financial performance. Looking at the performance over the past 5 years, it actually quite incredible. It has scaled the business from 300 million to a 1.3 billion run rate since its IPO, achieving a 50% kicker in 4 years. And its network has grown from 190 to 300 cities with significant improvement in latency. The customer base also doubled from 90,000 to 190,000. With recent efforts selling into large enterprise, the number of large customers also increased 5 times from 500 to nearly 2,000. Large customer defined as a customer with revenue over $100,000. Today, over 30% of the Fortune 1000 enterprise are clients of Cloudflare, and more than 20% of the world's top million websites utilize at least one of Cloudflare's products. And Cloudflare serves over 4.3 trillion web requests a day, and it also blocks 170 billion cyber threats each day. It kind of tells you like the scale it has today against like 4 or 5 years ago when they first went IPO. And also, more importantly, Cloudflare isn't the type of companies to grow at all costs. Its impressive growth is accompanied by strong improvement in profitability, as a free cash flow margin improved from minus 34% to positive 10%. Despite this strong financial performance, Cloudflare's valuation has actually retraced back to pre-pandemic level at about 20 times price to sales multiple. I think this represents a long-term investing opportunity, as I anticipate a sustained annual growth rate of 30% plus for the next decade. If I'm correct, I think Cloudflare will achieve 6 billion in year 5 and 18 billion revenue in year 10. So what gives me the confidence that Cloudflare can achieve such a high growth rate for such a long time? There are 3 competitive modes that to contribute to this enduring leadership, and I will cover this in the next slide. The first one is scalable and distributed network. So since its inception, Cloudflare has spent more than $500 million to build out its network, reaching 300 cities plus cities and 13,000 networks in over 120 plus countries. This is a network is a scale unmatched by peers. There are 4 important features of this network that gives Cloudflare a unique advantage. The firstly, is built on standardized commodity hardware. In this way, it can build out the network more efficiently, allowing Cloudflare to generate an impressive 75% gross margin or higher. The standardized hardware also allows the easy scale up to meet the growing demands and also reduce vendor dependence to allow them to source more easily and cheaply. The second feature of this network is partnership with local ISP, internet service providers, such as AT&T or Verizon in the US, or Jio in India, or China Mobile in China. They build servers directly within the ISP's network and close to ISP servers. This not only reduces latency, but also reduces the costs. A natural question to ask is why ISP would invite Cloudflare to build servers within its network. First, faster internet speed means higher consumption, means higher revenue streams for the ISP. Second, as ISPs can get the best security protection from Cloudflare. So it's a win-win situation. The third feature of the network is distributed nature, which can more effectively absorb and mitigate cyber attacks by distributing traffic across its extensive network, preventing any particular server from being overloaded. I think more importantly is like the rising concerns related to the data privacy underscore the need for data processing closer to the users. And last but not least is the network is programmable. This is very important. This empowers automation and also lends itself to scalability, a very important feature. To conclude this, these four features of the network gives Cloudflare the first, but also the most important competitive modes from my perspective. The second competitive mode comes from is the freemium model. If you have ever used like Spotify, you probably have heard term a freemium. So like Spotify has the free tiers. So it basically generates the advertising revenue from the free tiers of users. And for some consumer-facing software companies, freemiums is about like marketing and also about upgrades. So to hope the free users can upgrade to paying users. But in Cloudflare's case, it's more than just that. Since Cloudflare has a lot of idle capacity, so they can offer free service with very minimal incremental costs, and the benefits are enormous. First, the free users provide a lot of visibility in the network traffic, which helps Cloudflare further improve its security products. And second, they can rely on the free users to get new ideas and test new products. It's a very powerful network effect. In conclusion, I think Cloudflare has leveraged its freemium model to attract more than 4 million users to its ecosystem, of which 5% are now paying customers. The last competitive mode comes from is the unique serverless platform, Workers, as I already discussed its importance earlier. With its competitive pricings, we are seeing more and more workloads migrating away from the traditional cloud providers to Cloudflare's Workers. And another solution, R2, is the distributed storage solution they recently introduced as customers increasingly seek to minimize vendor lock-in and complain about the high egress cost. Egress cost is the cost to transfer data from one cloud provider to another. And with R2, Cloudflare totally eliminates the egress charges. It positions itself as the fourth cloud provider. I think this is very, very impressive. And the most recent earnings indicate over 80% quarter-to-quarter growth in usage in R2. So these three competitive modes are the essential integral components of Cloudflare's flywheel effect. In my investing philosophy, I utilized the flywheel concept initially introduced by Amazon to look at the power and the momentum of the business and observe like how each component interact with each other and reinforce one another. And one of these flywheel graphs for each of my portfolio companies, and this one is for Cloudflare. So as you can see, at the center of the flywheel is the growth in customers and I discussed earlier. The scalable and freemium models to operate at the most. Cloudflare acquires extensive data, enriching its network, and creating a robust testing ground for new products. And finally, this low-cost structure, which allows better pricing and is reliable service and satisfaction. This drives the Cloudflare to today handle nearly a quarter of the total internet traffic usage. That's all for the technical details I've covered so far. Let's look at some numbers. First, online, which is one of the concerns many investors have. Like most of the high growth software companies, Cloudflare hasn't achieved strong margins. As you can see, there are notes narrowing from minus 40% to minus 7%, and free cash flow margins from minus 34% to minus 7%. Looking ahead to positive 10% for free cash flow margin. Looking ahead to the next 5 years, the targets to achieve non-GAAP operating margin over 20% and free cash flow margin over 25%. This should be achievable by substantially reducing sales and marketing costs as enterprise solutions get better brand awareness. I also put down Salesforce margin history in the past 15 years as a reference. It demonstrates a clear path for software companies to achieve profitability. Despite having a very different business model, Salesforce generated nearly like 20% free cash flow margin when they reach 5 billion revenue scale. And I think Cloudflare can do better. The next important metrics to look at are unit economic and ROIC. I utilize the formula provided by Cloudflare, and I first compute the cost to acquire $1 of incremental revenue to be around $1.80. The cost to serve this lifetime value is about 50%, which includes like delivery, R&D, and support and G&A. And considering an attrition rate of 4%, I compute the unit economic to be about over 40%. Given Cloudflare's like considerable capital expenditure, it's also important to examine the return on incremental capital. So over the past 5 years, Cloudflare has spent $500 million in capital expenditure, which results in accumulated operating cash flow of $300 billion. This indicates a 60% return on incremental capital. Another angle to look at is like to look at the total invested capital in their balance sheet, which is about $400 billion. And if we use free cash flow of $120 million for the current fiscal year, we come up with 30% return on invested capital. Both of these numbers underscore the efficiency of Cloudflare's capital allocation strategy. Also worth mentioning, I think, is the frugal mentality ingrained in the company's management team. The founders often emphasize discipline in marketing expense, community building, and utilize word-of-mouth marketing to reduce customer acquisition costs. If they can continue to reduce sales and marketing costs, as I mentioned earlier, the return on capital profile will only get better from here. Quickly moving to risk and mitigations. Some of the risks are well be aware by investors. So I would just quickly skip through the 3 major ones. The number one risk centers around the concerns that Cloudflare's valuation might be too high, especially when compared to established companies such as Salesforce. So to justify this valuation, one must assume that Cloudflare can outpace the growth and longevity demonstrated by Salesforce over the past 15 years, which I believe they can. The second risk focuses on the competitive landscape. So Cloudflare faces intense competition in cloud security from Zscaler, Palo Alto, and Cisco. And also in CDN, they face competitors such as Akamai and Fastly. And of course, like in edge computing, AWS is the big players over there. Cloudflare, how does Cloudflare distinguish itself? With its more scalable and distributed network, they actually manage to win a lot of deals against the competitors. As a matter of fact, Cloudflare has points of presence in over 300 cities compared to Amazon's like 100 cities. So this gives Cloudflare a superior advantage in edge computing. The third risk is on Cloudflare's stock-based compensation, which represent over 20% of total revenue in 2023. It poses a risk of dilution if stock price goes lower. But Cloudflare aims to reduce it to below 10% of revenue in the next 5 years. This should be able to reduce the dilution risk. Finally, it would be a remiss of me not to discuss generative AI. I'm sure the audience here is very aware of this rise of generative AI. And from my perspective, this is going to be one of the most disruptive technologies after the internet and mobile. And I believe Cloudflare stands out as one of the select few poised to directly and substantially capitalize on AI advancements. In fact, machine learning has already played a very important role in its Act 1 and Act 2 in DDoS mitigation and zero trust solutions. And the rise of AI actually also introduced new complexities in cyber attacks, which actually amplify the demand for Cloudflare's existing offerings in Act 1 and Act 2. In a more direct way, R2, as I mentioned earlier, its storage solution has actually become the natural neutral place for AI companies to store their training data. In fact, their largest R2 customers today is an AI company who doesn't want vendor login. This multi-cloud approach allowed the AI companies to go find the cheapest GPU resources available in the market. And it's believed that Cloudflare today is the most commonly used cloud providers across the leading AI startups and established AI companies. They have customers such as OpenAI and Curtis AI, and they also have very strong partnership with NVIDIA and Hugging Face, and they continue to introduce like new products such as AI gateway, gateways, and Workers AI, and even in vectorized in vector database. The second opportunity is on AI inference. So inference is the process of running the live data through trained AI models to make a prediction or solve a task. Some of the training models are going to be too big to be able to run on the devices. But you cannot also run it, put the models too far away from the users. Otherwise, you would have, high latencies. Imagine if you are using the chat GPT and it takes like 10 seconds to give you a response. The user experience will be terrible. So the best place to go is going to be on the edge of the network. And so Cloudflare already has GPU resources in over 100 cities, and they are targeted to deploy GPU in all their data centers across 300 cities by the end of 2024. Another important consideration is on data privacy. So governments across the globe have become more cautious of what kind of private data is sent out of the country when their citizens use some of the AI tools. And Cloudflare is quite uniquely positioned because of its global network. Lastly, the third opportunity is also a longer one. It's about fine-tuning. So since Cloudflare has all the data of how people interact with your application, your website, it can just take the data and feed them into the foundational model, so the fine-tuned model can work specifically for your companies. And there's still a lot of unknown use cases for AI, but I think Cloudflare is going to be the one who is going to be capitalized on these advancements the most. Very quickly, finally, on valuations. In my base scenario, I foresee Cloudflare maintaining robust 34.5% kicker over the next 5 years, resulting in $6 billion in revenue and $1.8 billion in free cash flow. In a blue sky scenario, I envision Cloudflare to grow 45% or higher, leading to $3 billion free cash flow by 2028. At a more mature stage, Salesforce, for example, trades at around like 40 times free cash flow multiple. So I used a similar multiple to arrive at a fair value of $200 per share, i.e. 80 billion market cap in 2028, representing 150% upside in 5 years and 20% annualized return opportunities for the next 5 years. That's the end of my presentation. I'm happy to take any questions if there's any time left.
Thank you, Alan. So we have one question in the chat, and Ricardo Gonzalez is asking, how do you think about stock-based compensation at Cloudflare? He thinks at first glance it seems maybe a little high.
Yeah, I think like any of the high growth software companies, they use like stock compensation as a tool to pay their employees and also to have like interest to be aligned. So it's very high, like at 20%, like similar to a lot of like software companies. This is a risk, but also to cover that risk is like their variation right now is at 20 times of sales, which means like at 20% of like if even though they pay 20% of stock-based compensation to the employee, the dilution is still quite manageable at 1 to 2% dilution per year. Of course, the risk, as I mentioned in my previous slide, is like if the stock price goes lower, the risk is gonna the dilution risk is gonna be higher. And also the management they mentioned that they're gonna reduce this stock-based compensation to below 10% in the next 5 years.
Got it. Thank you. And another attendee is asking or says, they've noted the coverage advantage versus AWS, but given the capital resources of AWS, why is this a durable advantage?
I think it's more like a different like focus perspective. Like yes, AWS is trying to focus on edge computing, but Cloudflare is actually more than just edge computing. They also cover like security and DDoS mitigation and CDN. So they are like a different approach, and they also have partnership together as well. It's not only like they're not like pure competitors relationship, they're also partners.
Got it. Okay, great. Thank you. And another question from the audience is, what will prevent the cloud giants from investing heavily to compete more intensely with Cloudflare's network?
I think one of the things that I highlight really early on is the competitive advantage, which is like the second feature of their scalable and distributed networks. So they have this like first mover advantage. So they already build their servers next to the ISP, i.e. AT&T or Verizon's like server. So they have this advantage already. It's really hard to replicate. This is first, and second is again on what is the priority right now. The big the hyperscalers in Google, Amazon, or Microsoft, their focus is also very different from Cloudflare. They want the data to log in their cloud, but more and more like you see like those rising AI companies, they don't want the vendor log in. They actually prefer a more neutral cloud to store their training data. So that's where like Cloudflare comes in. They're like, okay, I can provide the neutral storage solution for you, so you can store the data in my database, and then you can find the cheapest GPU available, so you can move that data to whatever cheapest GPU, and then you can use my service for AI inference.